Ladies and gentlemen, good day and welcome to the Vishnu Chemicals Limited Q2 FY23 conference call. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Nikunj Jain from Orient Capital. Thank you and over to you, sir.
Thank you, Mike. Good morning, ladies and gentlemen. I welcome you for the Q2 H1 FY23 earnings conference call of Vishnu Chemicals Limited. To discuss this quarter and first half business performance, we have from the management Mr. C.H. Siddharth, Joint Managing Director, and Mr. Hanuman Bansali, VP Finance. Before we proceed with this call, I would like to mention that some of the statements made in today's call may be forward-looking in nature and may involve risk and uncertainties. For more details, kindly refer to the investor presentation and other filings that can be found on company's website. Without further ado, I would like to hand over the call to Mr. Siddharth for his opening comments, and then we will open the floor for Q&A. Thank you, and over to you, sir.
Thank you very much, Ankuj. Good morning to everyone. Continuing our financial year 22, Vishnu Chemicals delivered its best ever quarterly performance since the inception. The momentum we have is clearly evident with our improved return and leverage ratio and efficient working capital management. The efforts we have made so far has made us the most efficient producer in our chemistry group. We will continue to focus on our priorities, which are margin expansion, prudent capital allocation, debt reduction, gaining market share in India, and Americas with timely pivot in newer products and applications. One more area where we have focused in human capital is human capital development. Gentlemen, we have set up an initiative training system for our 1,000 plus employees working across India. We believe positive enforcements like these will be key to motivating our workforce and improve their technical and soft skills to deliver peak performance. Now, I will hand over this call to Hanuman to share our financial highlights.
Thank you, Mr. Siddharth, and good morning, everyone. We welcome you all to the conference call of Vishnu Chemicals Limited. The company has continued to make all-round progress quite consistently over the last 6 quarters. Let me now speak about the financial performance achieved during the first 6 months of the current financial year. Our consolidated domestic and export sales continued its growth trends, growing by 78% and 58% year-on-year. The consolidated revenues for H1 FY23 was 736 crores as compared to 440 crores in H1 FY22, registering a growth of 67%. The consolidated EBITDA margin for H1 FY23 was 16.7% compared to 14.1% in H1 FY22, an increase of 258 basis points year-on-year due to our overall improved operating mix, integrated operations, our focus on customer satisfaction, and a balanced geographic mix. In H1 FY23, we have achieved rupees 69 crores of PAT compared to 28 crores of PAT in H1 FY22, an increase of 145% year-on-year. Our PAT margins have increased by 2.9% in the last 6 months year-on-year. Coming to the quarterly performance, the consolidated revenues were 375 crores in the quarter ended September 30th as compared to rupees 242 crores in Q1 FY23, up by 55% on a Y-on-Y basis and 4% on a Q-on-Q basis. The consolidated EBITDA for our Q2 FY23 was rupees 63 crores compared to rupees 35 crores for the corresponding quarter previous year, up by 82% on a Y-on-Y basis and 3% on a Q-on-Q basis. Our consolidated EBITDA margins were 16% in this quarter compared to 14.2% in the same quarter last year. The consolidated PAT for Q2 FY23 was 35 crores compared to 17 crores for the corresponding quarter last year, up by 111% Y-on-Y and 3% increase Q-on-Q. The net profit margin of the company in Q2 FY23 was 9.3% compared to 6.8% in Q2 FY22. Like I just highlighted, our performance has been quite broad-based, and we can see that in quite a few metrics that we have shared with all of you. Our consolidated debt to equity is now at 1.05 times compared to 1.3 at the starting of the financial year. Our interest coverage ratio has increased to 7 times now compared to 5 times in FY22. Our annualized ROC is over 35% compared to 28% in FY22 and 14% in FY21. Some of the other metrics are there in front of you, like inventory days, which is how we calculate on RM cost, has come down to 87 days now compared to 112 days as on 31st March 2022. With this, I conclude my remarks. We can now commence the Q&A session. Thank you.
Thank you. We will now begin the question answer session. Participants who wish to ask a question may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. We have the first question from the line of Pritesh Chheda from Lucky Investment Managers. Please go ahead.
Yeah, hi. Sir, just wanted to check why is the debt actually gone up versus what you usually had in your balance sheet?
Good morning, Mr. Pritesh. Thank you for your question. Yeah. Our overall debt as of 31st March 2022 was about 303 crores, which is now standing at 359 crores. So, in fact, the debt has reduced in our standalone balance sheet, bringing down our debt to equity ratio in standalone balance sheet to 0.99. However, our blank fixed expansion is currently going on in Varium subsidiary, VBPL. So we have a loan inflow over there. We have taken borrowings over there to complete our project. But on a consolidated basis, the debt is almost the same on an absolute level.
No, whatever numbers we are seeing, I don't know where is the confusion. The debt was about 240 crores in March 22 on console, which is now about 273 crores. Is there any regrouping or anything? Or if you could just share the absolute debt which was there in quarter 4 and which is there in quarter FY22 end and which is now at H1 end, the debt and the cash figure on console basis, please.
Yes, on a console basis, our total debt as of 31st March 2022 was 360 crores. In this, the breakup is as follows. Our
360 crores.
363 crores. Out of that, we have a long-term borrowings of 244 crores and short-term borrowings, that's the working capital loan of 120 crores. As of 30th September 2022, the 244 crores of long-term borrowings has become 247 crores, and the short-term borrowings, that's the working capital, has come down from 120 crores to 112 crores.
So it is 247 plus 112, that is 359.
That's right.
So you had 364, which is 359 now.
Yeah.
And what is the corresponding cash figures in the same time period?
Our cash and cash equivalents as of 31st March was 15 crores, which now stands at 18 crores.
And this debt figure, does the pref capital is included in this or pref capital is outside this?
No, we have included the pref capital in this.
Okay, so this includes the pref capital of 40 crores, right?
The overall pref capital is not 40 crores, that's 77 crores.
77, okay.
Yeah.
The other question is, where are we on the caustic soda or utilization side, and what is the progress there in the Q2 versus Q4 when we had started the project?
Good afternoon, Mr. Pritesh. This is Siddharth with you. I'd like to give you an update on the progress on backward integration. Just to correct that word, it is sodium carbonate, not caustic soda.
Sorry, soda ash. My mistake. Sorry. Yeah.
So currently the operating levels are at 70%, and we expect to cross 70% as on Q2 ending, and we expect to cross 80% by Q4 this year. However, we target to achieve 90%, which is very ideal in the kind of operation we do, but we are confident to achieve 80%, which itself will give us about 45% of reduction in our general utilization of soda ash.
Sorry, you are 70% in Q2. You will go to 80% in Q1 by Q4, and this will make you self-reliant by?
It is, like I said, let me again correct that. It's self-reliant in the sense that we still have to use sodium carbonate, but we're using 50% less.
Okay.
Because we still need the virgin soda ash. As you know, as you understand, that it's a recycle method, one of its process. So we'll be using half of what we usually use. And when we will get there is, confidently we're saying by early next year, we'll be able to generate that kind of volumes on a consistent basis.
Okay. So and now the question is,
our research and development activities on to further improve it. I mean, because this is more on a operation level, but on a theory we can actually reduce it further and bring down the virgin soda ash consumption further. But again, that R&D activity is on. But yeah, basically on how we can reduce the virgin soda ash consumption further. Likewise, our sulfuric acid consumption will be completely negated in that process.
So, sir, then between Q4 of last year and Q2 of this year, where the 0% would have moved up to 70% capacity utilization, and we would be, let's say, whatever, self-reliant on soda ash to a certain extent, the margin change that I see is just 1%, and the incremental EBITDA is what I see is some 7-8 crores. So is there any other cost element which is unfavorable for us, or why is it that the movement from 0% to 70% is not completely visible in the operating profit number or the operating margin number, whichever you want to analyze it?
Let's talk about the gross profit here, okay? The gross profit year before, same period, was 88 crores. Whereas, if you see in Q2 of FY22, the gross profit is 120 crores. So this is already visible in the form of our, a significant increase on the gross profit margin here. Hello?
Yeah, I'm trying to just understand what you're mentioning. Just a minute, sir. You're mentioning that the gross profit in Q4 was 88 crores, which is
Q2 last year, Y-on-Y basis, if you see.
No, sir, my analysis, sir, I would like to understand the analysis versus Q4 only, because Q4 is where we started the backward integration. So whatever comments you give, it would be nice if you could give versus Q4.
So even if you compare that, it's 127 versus 140 crores now. So you can see almost a 10% on improvement in the gross profit on a quarter-on-quarter basis also.
So where the material substitution for soda ash is so large, is there anything other than this that we need to understand for whatever analysis we had done earlier for a lower caustic soda ash benefit flowing through?
Hi, Mr. Pritesh. This is Hanumant here. Where you're looking at is you were looking at quarter 4 numbers, whereas we had started the production of soda ash from quarter 4. So the comparison should be either with quarter 2 of last year or the quarter 3 of last year. So that will be a better comparison metric. Right?
Okay. I'll take this offline. And the other comment that you have specifically mentioned about barium in your press release,
Yes.
About some demand related challenge, and I saw some drop in the barium margin. So if you could comment on that part of the business.
See, we are working towards reducing our dependency on export by focusing towards a domestic market. That's where we are seeing incrementally 20,000 tons of barium carbonate comes in. Of late, there has been some deferment in the orders on account of sea freight coming down sharply, and also on energy prices in Europe have made our clients be more watchful about how the situation will pan out. So they've asked us to defer the orders for a quarter. However, this doesn't mean that there's a dip in demand, and basically, and also there's no actual substitute for this product. In fact, what we are witnessing is they are asking us to move this barium carbonate to their other facilities in North Africa and Far East Asia, which we are actively working on. That's why there has been a temporary headwind in terms of volume reduction in exports, which will be partially or mostly offsetted by increase in our domestic sales.
Okay. We had got extra realization and margins on barium specifically beginning last year. So that part, will there be now a reversal there, or do you think those things will hold on?
Those things should come back. I think we made this investment with certain targets in place, and that's going to be met. I think they will come back definitely, and we are already witnessing that demand come back, especially the gas prices now reversing in Europe. If you see the spot market has gone back to the old level. And also, as and when this destocking happens during this Christmas period, so customers are already in discussions for quarter 1 arrivals. And quarter 1 is for them on a calendar year basis. So we don't see, because this barium carbonate is an irreplaceable product, and it's very much linked to the building material industry. So we don't see any dip as such.
And lastly, from a year's perspective,
Mr. Pritesh would request you to kindly come back in the queue for follow-up questions.
Yeah.
Thank you. We have the next question on the line of Jainam Gilani from Moneybee. Please go ahead.
Yeah, hi, this is Manan here. Firstly, are we seeing any slowdown in the chromium segment as well? You highlighted on the barium side. If you can just throw some light on the chromium side, if we are seeing any demand-related issues over there.
It's quite steady. We don't see any demand-related slowdown, or there is no significant price correction. However, on account, especially on the export side, there might be some correction on account of sea freight going down. That's the only difference we are witnessing at the moment.
Oh, and on the supply side, because you had mentioned in the interview some players from Turkey were facing issues. So, is there any issue on the supply side then for the chromium segment?
No, I mean, I think, like I said, especially we see more demand for chromium chemicals coming out of North America. Our marketing team is working very aggressively to capitalize on that opportunity. Yeah, that's what I can say. But demand remains resilient. In fact, is looking better for early next year, given what is happening, what we are sensing from the North American clientele.
Okay. So we are very confident of selling out our additional capacity without any contraction in the realization.
That's right.
Okay. Secondly, on the freight expenses, in this quarter, there was a huge jump on a quarter-on-quarter basis as well as on a Y-on-Y basis on our selling and administrative expenses. So if you can just highlight why is there such a huge jump on a sequential basis?
Good morning, Mr. Manan. Thank you for this question. Yes, our shipping and forwarding charges have increased, which is a major component of our sales and administrative expenses. On a Y-on-Y basis, actually it has come down as a percentage of sales. But overall, what we are seeing is that the freight costs have come down substantially from the highs, especially from July and August. And what we have seen is the orders were booked till September. So going forward, we will see a correction in the freight costs for us and for our customers. That will reflect in our sales and administrative expenses going forward.
Okay, so what you are saying is that we had already booked the containers at higher rates, which is why we had this higher expenses.
That's right.
So can you just highlight what was the average container cost in Q1, Q2, and currently?
Average container cost, now that's subject to the route on which it is. But I'll just share one example with you. Like say, if I just talk about the freight rate, let's say the freight rates from India to Europe, which was about $5,000 for a 20 equivalent unit, just a few months back, has come down to $3,500, right? And it was $3,500 out of 30th September, and as I'm speaking to you, it's down to about $2,000 for a 20 equivalent unit. So, this is quite, it's on a downward trend, but still the rates are nearly 100% higher compared to what it used to be pre-pandemic.
America?
Hello? Yes?
Yeah, what would be this trend for North America as well, if you can just highlight, because most of our sales are towards that region?
The freights are down on almost all routes.
Okay.
So that includes North America as well as Europe, Africa, Asia, across all the routes.
Okay, because what I'm seeing is that
there are certain routes
the gross margins that we've had because of our backward integration has been entirely eaten up by this increase in our freight costs. And we are not able to see the impact at the EBITDA level. So hopefully we should see that from next quarter onwards.
That's a very good metric. At the same time, what I'd like to say is the EBITDA margins would have been much higher if the realizations would have been the same. Because where our focus has been to maintain our spreads, irrespective of the fact that we are, getting a higher realization for our product. So whether the realization goes up from here or the realizations goes down from here, the spreads are key to us. But that leaves a very different impression on the EBITDA margin. Because if the spreads are same and the realizations go up, your EBITDA margins will not expand at the same rate, right? And if the spreads are same and your realizations come down, I'm earning more dollars on every sale I make. So then the EBITDA margins shoot up. But the key over here is the customers have worked with us consistently for almost 2 years since the pandemic. And one thing that's been witnessed is that, we have been able to pass through the rise in raw material costs and the freight costs. At the same time, leverage our abilities to command a premium and set the price in certain products that we manufacture.
Any further questions, Mr. Jana?
No, I'll come back in the queue. Thank you.
All right. Thank you. Participants who wish to ask a question may press star and one on your touchtone telephone. Participants who wish to ask a question may press star and one on your touchtone telephone. We have the next question from the line of Ranveer Singh from Edelweiss Wealth. Please go ahead.
Yeah, thank you for taking my question. So just on freight, discussion we did. Just wanted to understand, because we are operating in a globalized, condition, so freight rate would have come down from, international other suppliers also, especially when the gas supply is now getting, normalized from Russia or Turkey. So just wanted to understand our competitive position. So realization-wise, reduction in freight cost is advantageous for us or disadvantageous for us?
Mr. Ranveer, it's a very good question. Let me give you some information on what has happened during the pandemic time. The freight outbound Asia, which is from China, Malaysia, all the Far East and Southeast, outbound to Europe and Americas have increased substantially. Whereas freight out of the United States towards Asia or from Europe or Turkey has increased, but very marginally. So there has been a huge impact on the shippings out of Asia. So how we look at it is it's a big advantage for Vishnu, basically being the major Asian exporter of chromium chemical. Whereas the freight freight out of Americas and Turkey, they have not changed very significantly. In fact, our competitive advantage has increased.
Okay. And the slowdown in Europe, is the reason being that probably the supplies from, Turkey or some other destination has started resuming. So just wanted to know, is this temporary or going to sustain? Because you are saying this is temporary. So wanted to understand that why we believe this is a temporary.
Could you repeat your question?
Wanted to understand, like in this quarter, we mentioned that in Europe there was a demand, there was softer demand from European side. And so demand for us, it was softer, or globally, I think demand would have been same. I think other suppliers might have, started supplying more quantity there. So is this a scenario, or overall, this was the overall slowdown for everybody? And why we believe this is temporary? This is.
Let me answer why we believe this is temporary. Because with respect to natural gas supplies, the most affected country is Germany, because 80% of the gas supplies is coming from Russia. However, Italy, Spain, and all these countries where bulk of our carbonate is going, their natural gas mix is not completely Russian dependent. So what we have seen is, since Spain had some kind of dispute with Algeria, which is one of their major gas suppliers, so now they have settled and things have gotten back to normal now. So that's what is giving us more confidence, and we are already in active discussions with the clientele to resume the regular volumes to them. This is giving us more confidence. That's why we feel this as a temporary headwind. In fact, we also see that once this restocking is happening, definitely our clientele want to increase the finished, raw material and improve their output, which they have lost during the last 2 or 3 months, basically.
Okay. And what is the difference in realization in India versus export market in barium compound?
It's very marginal. I would say so. Very marginal. It could be a 200-300 basis points, depending on, because even in barium we have 3 to 4 different products, basically, depending on the particle size and everything, applications and everything. So it's very dependent on the industry. But to give you some idea, it would be 200 to 300 basis points, perhaps higher in the exports, given the exchange rate, how it is today.
Okay. Can you quantify the number in India? What is your realization currently?
We won't be able to do
Okay. We are not giving a realization number for chromium on barium separately?
I'm afraid not.
Okay. Okay, that's it from my side. I'm with you. Thanks a lot and all the best.
Thank you. We have the next question on the line of Ravi Mehta from Deep Financial. Please go ahead.
Yeah, hi. Thanks for the opportunity. Just wanted to know the capacity utilization levels where we are operating.
Good morning, Mr. Ravi. Currently, we are operating at 80% plus utilization level in both the verticals, and this is the trend that we have seen from last year, and we are continuing this trend in the first half of this fiscal also.
So when you say 80% plus, this will be on the expanded barium capacity of 60,000?
That's right.
And the expanded capacity
The first quarter was lower. The first quarter was lower because that was the first quarter of operations for barium.
Sure.
But the second quarter, we have started utilizing the expanded capacity, and we operated at about the second quarter, the expanded capacity operated at close to about 65%. But that's overall, the barium capacity was close to about 80%, which will continue in the second half also.
Okay, you're saying 65% of the expanded capacity in Q2?
Yes, 65% of 20,000 tons,
okay.
And 80% plus, close to 83-84% of the 40,000 tons. So on an average, it comes to about 80%.
Sorry, I just got confused. Barium would be 15,000 tons? 60,000?
60,000 tons is our total plate capacity in barium.
Okay.
Yeah. So 80% was the utilization in the first half of this.
Okay. Of the plate capacity?
Yes.
And 65 in Q2? And on the chromium side?
I'd request you to consider this 80% on a total 60,000 tons. That will remove all.
Yeah.
Very simple.
Yeah. And on the chromium side, if you can highlight, because there also I think we've added capacity by 10,000 tons.
Like I said, we don't disclose the exact volumes. It's more from a business confidentiality reason.
Yeah, sure. So I'm asking that the utilization levels, what you're talking is on the expanded capacity, right? Including the 10,000 ton that you added from the.
Our 10,000 tons that has not added to significant volumes in Q2.
Okay.
Because that is the first quarter of operations.
Okay.
Having said that, on a overall basis, we have operated at 80% plus levels.
Sure.
On our plate capacity of 70 plus 10, that is 80,000 tons.
Sure.
Going forward, we are likely to go up by 5% in this financial year in chromium chemicals volumes, that is production volumes, compared to last financial year. But next year it will be a full impact capacity of 10,000 tons, which means we'll be operating with 80,000 tons from day one of the next financial year. That's 14% more capacity compared to 70,000 tons.
Okay. So optimally you can use entire 100%.
Optimally, we can use close to about 85%, and we have been achieving that metric.
Just like to add on one thing, given the nature of our business and the amount of maintenance that goes into it, if the asset created is operating at the level of 85-90% is a very good operating level.
Okay, understood. Okay. Sure. Yeah, thank you. That answers.
Thank you. We have the next question from the line of Rushil Sudalka from Pioneer Wealth Management. Please go ahead.
Hello. Yeah. Am I audible?
Yes, we can hear you loud and clear.
Congratulations for a good set of numbers. I just wanted to ask you one thing. Like in the TV interview yesterday, you have guided for the margins to go to 20% by end of third quarter. Did I hear it right, or will it take at least 3-4 quarters for us to go there?
Hello.
Hello.
Yeah. Good morning. Thank you for your question. On the margin profile, as you can see, we have delivered on the targets that we set out at the starting of the year. But there's still some work to be done to achieve an overall targeted EBITDA margin of 20%, compared to FY22 numbers of 15%.
Okay. Yeah. Got it. Correct. Yeah. When can we go to that 20% band?
Yes, it is. If you see our performance in this quarter, it's like 8 products that we have broadly, and the one product that we have in our subsidiary, that faced a little bit of a challenge, so to say. But it's hard to put a timeline to how the markets will come back, because it's not related to how competition is behaving, but how customer is behaving. So if the customer and the consumption comes back quickly, then we'll be able to achieve that faster, because we are not seeing any challenges on the chromium chemicals front. So it's about how barium chemicals is going to shape up. Like I said, it's very difficult to put a timeline to it. As we can see, and as the data is available to us, the natural gas prices are quite dynamic. But going forward, that's our target of 20%.
Just to add to it, during the call, I did mention about a new product launch, barium sulfate, which is going to be launched in the first quarter of next financial year. And we strongly believe this will augur well with the barium family, and it's a part of our strategy to build a product mix like what we have done in the chromium. This will bring a lot of resilience for this business and help us to work on that product, basically. And it is going into the paint industry, and we are very excited and looking forward for this product to be launched, and our focus will remain to be domestic market. It's a clear import replacement. This will definitely add to the EBITDA margins in the coming years. But like I say, our targeted EBITDA, to reiterate what we have said, is our targeted market EBITDA is 20%, and this is very likely to be achieved in a few quarters to come.
Okay. Yeah. Thanks a lot. And one more question is, like, our debt to equity ratio has reached 1 from as high as 3.4 3 years back. So how much can it be for FY23, and what's your guidance for FY24? How much can it reduce more, or will it stay closer to the same level, since we are having one more capex in barium for 90 crores, for which we have taken debt also?
Thank you for this add-on questions. The current reduction in debt is also including part of the debt that we have taken for the new product in barium. So overall, the debt outlook is that our focus in the next 6 months will be to continuously, bring down our overall debt to equity levels. But just to highlight one important metric, which is, I'm sharing with you, though the revenues of the company, if you see the standalone company, we have grown from close to about in the last financial year, from about 577 crores in FY21 of revenues to about 900 crores in FY22, and in the first 6 months, about 630 crores. So the revenues have increased by more than 100% in the last 18 months. We have not increased our working capital limit. And there was a question by Mr. Pritesh. I wanted to highlight it at that point of time also, but if you had noticed, I had given a breakup of my short-term borrowings or my working capital, which was 120 crores at the starting of this financial year, and which has come down to 112 crores. So we have not enhanced our limit, and we are consistently putting pressure on our overall working capital, so that we can bring down the inventory days as well as receivable days on an ongoing basis. So that's been our focus, and we'll continue with that method.
Okay. And last question from my side is, the volume growth that we witnessed in Q2 is 16%, right? And is the guidance of the 30% volume growth for FY23 intact, despite having some softening of pressure from barium side?
Let me answer that question. In the volume growth that we have seen in installed capacity of chromium chemicals is 14%, and in barium chemicals, installed capacity has gone up by 50% from 40,000 tons to 60,000 tons. That happened in March 2022, but we are seeing the full impact of that from Q1 of this financial year onwards. Like I said, the chromium chemicals debottlenecking has just completed, and it's still progressing well from the operational point of view. So we'll see the full impact of those volumes next year. But even on a year-on-year growth of volumes in chromium chemicals, while the number will be single digits of 5 to 6%, but next year we'll see a far better improvement of nearly 10% in our volumes in chromium chemicals. But in barium chemicals, it will be about going from 60,000 tons to nearly 1 lakh tons. That is 30,000 tons of our new product. So that's our total trajectory of volumes that we have shared with the markets.
Okay. Yeah. Thanks a lot. That's all from my side. Thank you.
Thank you. We have the next question from the line of Hiral from 4R Investments. Please go ahead.
Thank you for the opportunity. And congratulations for the good set of numbers. I have two questions, and pardon me if I missed some clarification. I want to understand why.
Hiral, your audio is not very clear. I'm sorry.
Is it better?
If you could go off the speakerphone, that would be much better because it's.
Yeah. Is it better? Is it better?
Yes, now it's much better.
Yeah. Thank you. So my first question is why the barium pricing is under pressure, and what I understand due to some headwind from the euro. So when do we expect it to get normalized? And the second question is, we are seeing that the pledge percentage is still currently high, which is 36%. It has reduced from 40%. But when do we expect it to get further down from this level?
Yeah. We are expecting the volumes to come back during the quarter 4 of this financial year. We're expecting all the destocking to happen at our customer end. And the price now have almost come back to pre-COVID level.
Okay.
And so we are expecting demand to come back and we getting back into those volumes during the quarter 4 of this year, which is first quarter for our clientele.
Right.
Perhaps it could be earlier also because they expect a quarter 1 delivery, so it could be in November, December shipments from our side. So that's where we see. And although and we don't see any impact of construction in Europe per se, in spite of whatever you've been hearing about recession, because ongoing projects are still continuing, and we are not hearing anything about dip in the demand or that kind of issues. And most importantly, the product which we are supplying is non-substitutable.
Right.
And the quality which we are able to supply and on a consistent basis is also something far better than what our Chinese peers are supplying. So that gives us immense confidence of getting back to the volumes sooner than later. Regarding pledge, I'll ask Hanuman to throw some light.
Thank you.
Good morning, Mr. Hill.
Yeah.
Thank you for your question. Let me reiterate that the promoters of the company pledged their shares to our consortium of banks for funding to be utilized by Vishnu Chemicals Limited for its capex. This started in 2007, and at that point of time, the company did not have enough security to be provided as collaterals, because the funding was required to expand our capacity from nearly 5,000 tons per annum in chromium chemicals to 50,000 tons. So that's where the promoters stepped in, and they infused, they gave their shares as pledge to the banks to meet the margin requirements. Having said that, the entire pledge is with the three banks that we have in our consortium. All of them are PSUs, and they have been associated with us for a very, very long time. Just to give you an update, this pledge was as high as 65% of promoters holding in FY15, which has now gradually come down to 36%. We acknowledge that it is still very high, and we are working on it, and organically it will be completely out of the system over the next 3 quarters.
Okay. So in next 3 quarters, you mean to say the pledge will get removed organically?
Yes. Yes.
Great. Super. Great. I think that answers my questions. Thank you.
Thank you.
Thank you. Participants who wish to ask a question may press star and 1 on your touchtone telephone. We have the next question from the line of Kaushik Dani from Satco Capital. Please go ahead.
Hello. Hello.
Yes.
Am I audible?
Yes.
Thanks for taking my question. Congratulations on a great set of numbers. Sir, what is the reason behind of the barium segment degrowth? We took the price hike in April 2022. So what is the volume growth in a barium segment?
Good morning. The volume growth cannot be shared. Like I said, we don't share the absolute volume growth. But if you see, last year we operated at close to 80-85% on our installed capacity of 40,000 tons. And this year we are operating at 80% on an installed capacity of about 60,000 tons. So overall, in the first 6 months, our volumes have grown by close to about 10% on a year-on-year basis. And this is further likely to improve as we move forward.
Okay. And
there is no degrowth in our volumes in barium chemicals. Yeah.
So, sir, how much price hike we took in April 2022?
Initially, the price hike was close to about, if you compare the last 6 months compared to FY22, the prices in barium vertical went up by close to 25%. The value hike, the realization per kg.
Mm-hmm.
Right?
Yeah. Okay.
Yeah.
So can you quantify the margins for the chromium and barium segment? I think in Q4 FY22, we have a margin in a barium segment is around 9.5%.
Correct. Correct. Yes. In barium segment, our EBITDA margins in Q2 FY23 is 11%.
Mm-hmm.
Yeah, compared to 9% in Q4 FY22.
Yeah. And for this quarter is 11% for the current quarter, Q2 FY23.
Yeah.
And for the chromium, sir?
In chromium business, we reported a EBITDA margin of 17.4% in the current quarter.
Okay. And when can we achieve a sustainable margins for barium segment is around 16 to 20%?
Like we mentioned during the call before, we are working on this, and that's the reason why we have also launched a product which is an import substitute. We are working on a product in barium chemicals which is an import substitute, not manufactured by anybody else in India. And it will diversify our end user industries.
Okay.
Just like, the things that we have learned from our standalone business is to diversify our product profile. And that automatically de-risks ourselves from geographies as well as end customers. Because there will be times when one market does well. There will be times when one sector does well. Today we are, of course, dependent, at least in barium. But going forward, this launch of a new product will help us, mitigate these risks of product concentration.
Okay.
Yeah.
Hi, Harumant. Kaushik here. Okay, considering the challenging times, definitely the results seem very decent. Okay. Now the thing is, first of all, roughly 46% of your sales come from LATAM, right?
40, can you repeat? 46?
46% of the revenues are coming from the LATAM, right?
No, I think if you take our overall sales, no, it is much lower. Even if you consider our export sales, it's about 28% on a consolidated basis.
28.
Yes.
Okay. So basically,
it includes LATAM, it includes even Mexico as well, basically. Just to
okay, so especially when you consider LATAM and Mexico, we all know how the currencies have, functioned against USD as well as against the Indian currency. So can you just give some thought, actually, what sort of constant currency growth you guys would be, capturing?
What I can share with you is what we are hearing from our customers in terms of currency devaluation in those countries on account of dollar being strengthened, especially in the LATAM where the main markets are Mexico and Brazil. The devaluation of this currency is marginal, even marginal compared to Indian currency devaluation. In fact, these are very much agriculture and automobile, export-related economies, and the impact is being not felt or not heard of.
Do we not have any sales in Argentina where there has been a constant depreciation?
No, we are not operating that strongly in Argentina, and given the risk involved in that country, so we are not concentrating much in Argentina. Yeah, it's because the way the currency devalues.
Right. And I think previously we had mentioned that apart from precipitated barium sulfate, there would be another product called barium hydroxide. So this 90 crores capex includes both these products?
Yeah, it includes both products.
So do we have a breakup? So let's say from 60,000 to around 1 lakh, what we are doing, this incremental 30 to 40,000 tons, everything would be for new product, or it would be something for existing facility?
Like I said, we are having a chain of chromium chemicals in our side. Let's say where we use sodium dichromate is very relevant to the market and the kind of gross margins we target. So similar value chain will be developed in barium. So how the end user market is performing and the targeted gross margins will motivate us to focus on the product mix. That's what I can. It's hard to see the volumes on which we will be working on. It will be really very relevant to the end user market.
So what sort of asset turnover are you expecting on this 90 crores capex?
The targeted asset turnover is 2. But that may not be achieved within a year or two. It will be FY23 when could achieve that kind of asset turnover.
Okay, and are the gross margins for these 2 new products better or in line with the existing barium?
They are slightly better, especially on the barium sulfate, which is a paint filler being a specialty product. So they will be definitely slightly better than the existing product.
Okay, so you expect, because this is a fully import substitute, so the expectation is that we have got enough distributor tie-ups or company tie-ups that the entire 15,000 to 18,000 tons, what you expect as a production, should get absorbed domestically?
It's a good question. I think we are in discussions with possible distributors as well. As the idea is to be more B2B than B2C. So our marketing team is actively working on that, and obviously there is more interest because given the way the currency is devaluing in India, people are looking for a domestic substitute sooner than later. So with that being said, the approvals might be faster than what we have anticipated, what we may anticipate.
Okay. And finally, any changes which is material on the chromium overprice trend?
Sorry, please repeat your question. There was some.
How has the chromium ore prices, behaved in last few months?
Not very volatile. They remain steady.
Okay, okay, fine. And finally, when was the latest price hike taken for chromium as well as barium?
No, we don't share that information.
Okay. Thank you, Siddharth. All the best.
Thank you, sir. Thank you.
Yeah.
Thank you. We have the next question from the line of Sabyasachi Mukherjee from Centrum PMS. Please go ahead.
Yeah, hi. Thanks for the opportunity. Am I audible?
Yes, you are.
Okay. So Siddharth, there is some confusion on the volume growth and the outlook. I believe the chromium sales volume growth is 16% for H1 FY23 year on year, right?
On a plate capacity, 14%.
No. I'm not talking about your installed capacity going from 70,000 to 80,000, thereby translating to 14% growth. I'm not talking about that. I'm talking about the sales volume. Whatever volume you have sold in H1 FY23 versus H1 FY22, what is the growth over there?
It is flat. It's more on a value increase.
Okay, it is flat. Okay. And what is the outlook for H2 of this financial year?
Since I've mentioned that debottleneck capacity in chromium of 10,000 tons has come online. So that's where we'll be working on, especially on our chromic acid production, which we are seeing more demand from the wood preservative and electroplating industry. We'll be working on putting that volumes in this application segment.
So this incremental 10,000 tons, what is the expected capacity utilization you foresee for H2? Will it be 50% or more than that or less than that? Any ballpark number, any estimates?
In between 80 to 82% will be the operating level.
Okay, you'll achieve ramp up in a very short period. I mean, you will be able to operate at 85% of the incremental capacity as well.
Yes, because it's more of a debottlenecking, and so that gives us more confidence to operate at that level.
Okay.
And also the product mix where this additional capacity is going to turn into another value-added product. We see a lot of visibility in terms of orders as well.
I thought this new capacity is at a separate plant than your existing plant. So ramping up, I thought it will take time to ramp up. That was the thought process. I guess this 10,000 is in Bhilai, right?
Yes. Yes.
So you are saying it will not take time to ramp up the capacity?
Could be a month, could be 45 days. We don't see any complexity in ramping this up. If we are talking about a new product launch like barium sulfate, that I would take more of a cautious call on stabilizing that product. Since we are operating and it's a similar process, I would say about 30 to 45 days is what we would take.
Okay. Got it. That's very much clear on the chromium side. On the barium side, you mentioned that last year we operated, FY22 operated around 80-85% on the plate capacity of 40,000 tons. You are tracking the same levels, almost same levels since Q2. Q1 was little lower since Q2. You are tracking the same utilization levels on the expanded capacity of 60,000 tons. Is the understanding correct?
That's right. Like I said, we faced a temporary headwind because of this freights coming down and some uncertainty in Europe. But we don't see any volume degrowth compared to Y-on-Y basis. And we are confident to pick up the volumes during Q4 of this financial year itself.
So just to understand this thing a bit deeper, you faced headwinds from the export side, and since barium is high on exports, you tried to compensate those volumes with domestic sales. Is the understanding correct? And due to higher domestic sales, your realizations, which is lower in domestic and higher in exports, your overall realizations in barium came down. Is that understanding correct on my part?
Not really. Like I mentioned to you, we are focusing more on the domestic market moving forward, because the way the ceramic industry is growing in India, and the product specifications what we offer is not available. So our intent is to grow in the domestic market. So we have not done an increase in the volume in the domestic market yet. That's what I've given a guidance.
Okay, and what would be our market share in domestic?
Our market share currently is at 45%. Our intent is to go to 65 to 70% in 1 year.
Okay, 45. So basically, 45% of the total demand is satisfied by us in terms of barium carbonate. The rest, 55%, is supplied by any other players, or is it imported? What is
there are few other players who are supplying. We have a different specification which we offer, whereby our end user has a quality advantage. And with this capacity expansion, we are aggressively working to turn that into a regular business.
Okay. So last question from my side. So what is the outlook? So H2 I understood. What is the outlook for switching back to chromium? What is the outlook for FY24? Because we don't have much capacity in place, right? We just expanded 10,000 tons. What is the outlook for the next round of capex? Or where do you see yourself in the chromium segment? Barium, I understand you are expanding a lot, but the chromium, your main business, chromium, what is the outlook for next 2-3 years?
We are already sharing the levers of growth and margin expansion, but we don't want to give a guidance on a quarterly basis, to be very honest. We've already shown significant improvement in ROC. Last time we had mentioned that our target ROC is upward of 30%, and we have crossed this. In terms of volume, like I would like to add, and I did mention that we are seeing some consolidation happening in North America, and management is very seriously, not contemplating, but seriously considering an increase in our chromic acid capacity in our Bhilai, whereby we would need additional sodium dichromate. And at the same time, we are working on another value-added product called chromium metal, which also requires additional sodium dichromate. So for the next 2 years, we may not be able to add additional volumes on the chromium front, but we could work on the product mix since the demand is strong. But thereafter, in order to add to the value adds like chromic acid and chromium metal, additional sodium dichromate, additional feedstock in the form of sodium dichromate is required. If you ask me how much, there could be somewhere in between another 20 to 30,000 tons of sodium dichromate is required. Reason being, these products require more unit consumption of sodium dichromate in those products.
Okay. So we are working on the product mix side. We want to move on the value chain, move little higher and optimize the product mix in the near term. That is the thought process, right?
Just to put it into perspective, we want to increase one value add that's already there, given the order book and given the kind of traction we are seeing in the West. And at the same time, an interesting super alloy which we are working on, which is chromium metal. This we are planning, we are working on it, but it will take 2 years time to launch this, where additional dichromate feedstock in the form of dichromate is required, which calls for additional capacity of another 20 to 25,000 tons in 2 years from now.
That's great. Very helpful, Siddharth. Thank you. Thanks all. That's all from my side.
Thank you. We have the next question on the line of Raikin Shah from Omkara Capital. Please go ahead.
Hi. So I think Siddharth mentioned that barium volume could come back in Q4. And regarding margin expansion, which the earlier participant asked in the barium segment, Hanuman mentioned that barium sulfate, should add to this. But I think that is coming in Q1 FY23. So are we expecting H2 to be weak in terms of margins?
Good morning, Mr. Rikin. We don't expect H2 to be weak. That's not how we look at it. But overall, with the easing supply chain, the weaker rupee, and the reduction in energy prices in Europe, that will help barium come back quicker. But nobody can put a timeline to it. That's how I'd like to say. At the same time, we'd like to reiterate that barium carbonate, which is the product that we manufacture in Vishnu Barium Private Limited, it goes into ceramics, tiles, bricks, caustic soda, brine purification industry, and these areas, need consumption of barium carbonate on a mandatory basis. There won't be any impact on consumption. It's not an industry that is disappearing. It's only a headwind that one of our key markets is facing. And due to which, the Q2 saw impact in barium chemicals. At the same time, overall, we'd like to highlight that on chromium chemicals, we have achieved significant improvement in overall profits. And on a consolidated basis, we have withstood these challenges. That's the benefit of having a diversified portfolio. Be it barium or chromium chemicals, they are under the same umbrella of inorganic chemistry for us. That is converting minerals from the planet, minerals from the earth into chemicals. That's where we specialize in. And with backward integration improving from where it is today to about 85% plus levels, we will see further margin expansion and sustenance of profitability.
Okay. So in barium, has the raw material price also corrected?
No, we are not seeing any correction in raw material prices in barium.
Okay. So in chromium, I think there is an increase in sales. Undeniable, there is a gross margin expansion. But how much would you, attribute that to rupee depreciation, perhaps?
Marginally, because if you see, the rupee started depreciating quite from last financial year onwards, but we have witnessed our overall net forex gain in the first 6 months of this financial year to be around 5 CR. So, that's the benefit that we have got from the rupee depreciation so far. Just like to highlight that we don't like to keep any open exposures and keep our unhedged portions open. So that mitigates our risk from a point that, we are already a net exporters, where 50% of our turnover comes from export. So that benefit is always included into our profitability.
All right. So I think just at the cost of repeating, someone who had asked earlier,
please,
should the sales and administration expense come down on a, Q-on-Q level?
Yes.
All right. I think that's it from my side.
The major cost over there is shipping and forwarding expense.
Right. Because I think container freight rates have come down substantially, and if with that logic, yes, it should come down.
Yes, absolutely.
All right, I think that's it from my side.
Thank you. Participants who wish to ask a question may press star and 1 on your touchtone telephone. Participants who wish to ask a question may press star and 1 on your touchtone telephone. We have the next question on the line of Sudhir Bera from Right Time Consultancy. Please go ahead.
Yeah, Siddharthji and Hanumanji, congratulations for super set of numbers, given the volatile global situation.
There is some disturbance, Mr. Sudhir.
Not
audible.
Mr. Sudhir, if you can go on the handset mode, we will get your audio more clear.
Sir, now am I audible clearly?
Yes.
Hello.
Please go.
So, sir, congratulations, Siddharthji and Hanumanji, for a super set of numbers, given the volatile global situation. Sir, my question would be like, considering the rupee depreciation and also effect of container freight rates and also volume growth would be coming in H2, and also, backward integration would be operating at higher capacity. So what kind of margin expansion do you see in H2 as compared to H1 for the current year?
We reiterate what we've said, that it's hard to give a number. Our target is to achieve 20% EBITDA in a few quarters from now, I think, and we are in line. And given the way the backward integration is progressing or will progress in a few quarters from now, that's the target we have. We can't give you an absolute number on the EBITDA for the next 6 months, but what I can say is the margin will remain intact or improve. That's where we are seeing, in spite of this variation.
Yeah. And now our solar capacity will be operational in H2. So, what kind of power saving do you foresee in FY24?
Good morning, Mr. Sudhir. This is Hanuman with you.
Yeah.
The solar power is going to help us meet about 25 to 30% of our energy requirements in Srikalahasti, which is a unit that manufactures barium chemicals. It will help us reduce our power costs by close to about 10 to 15%.
Oh, great.
Because we have entered this contract with one of the leading solar power companies in India for a 20-year contract period at a fixed cost that will give us the benefits from the Q4 and more effectively from Q1 of next financial year in Vishnu period.
Great. That's all from my side, and all the best. Thanks for the opportunity.
Thank you.
Thank you. We have the next question from the line of Jainam Girani from Moneybee. Please go ahead.
Yeah, hi, Manan here. So you mentioned that the freight rates are coming down, and we are trying to capture the domestic market in the barium segment. So then, wouldn't more imports also be flowing into India as the freight rates are coming down, and thereby, prices could further fall down, or do you see the prices have stabilized now in the barium segment?
Good question. Let me clarify that there is no import of barium carbonate into India. So it's not marginal. There will be no impact on freight coming down other parts of the world, because it's mostly ours and the domestic traders. There is no imports into India of barium carbonate.
As of now, there's no import. So then, with freight rates coming down, there is a possibility of imports coming in then?
We don't see that. Even before the pandemic also, even when the price rates were at lower side, you see the 10 years or even more, there has been no imports of barium carbonate.
Okay. And again, in the chromium, just to get my understanding correct, so you mentioned that the prices have been stable, so there's no price hike that we've taken. Also, our volumes are flattish on a sequential basis, but our sales have gone up by almost 5%. So with volumes and prices being stable, so this incremental 5% sales that we are seeing is primarily due to rupee depreciation, right? Or am I not getting something?
Thank you, Mr. Manan, for this question. Like we said, we have already started the 10,000 tons of dewatering plant that gave us incremental volumes on a quarter-on-quarter basis. But when we say flattish, it is plus or minus 5%. So that's a marginal change in volume. It's not a meaningful change. So if you ask me, on a quarter-on-quarter basis, our volumes have gone up by nearly 5% in chromium chemicals, but that's very marginal. Whereas the prices have not changed on a quarter-on-quarter basis.
So the entire increase that we have seen in the chromium segment over H1 to H1 is primarily price driven.
It is, yes. Yes.
Okay.
That's right.
Thank you.
And also on account of product mix.
Yeah, understood.
Yeah.
Okay. Thank you.
Thank you.
Thank you. In the interest of time, that was the last question. I would now like to hand it over to Nikunj Jain for closing comments.
Thank you, participants, for joining us today. It's been a pleasure. If there are any further questions or queries that we have not been able to answer, please feel free to reach out to me or Orient Capital team. Thank you and have a good day.
Thank you. On behalf of Vishnu Chemicals Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your line.